you see the slide on this particular slide, specifically on the left-hand side, I think government has made a lot of different types of initiatives, which we'll talk about in this next slide. But the whole focus is that how do we penetrate in digitizing the rural part of India, where we'll see a population as low as 2,000 people as well. I think that's the key strength and the key case study itself, which I'm sure a lot of large university would be covering. And that has only happened because of the innovation that the government of India has done in the last decade or so. Say, for example, in India, we have got a micro ATMs where I, Amit Ratanpal, as an individual, will have certain rights on basis of which any individual who comes to me can withdraw cash from the bank account. And that has happened because of the Aadhaar enabled payment system. That today with your thumb and the Aadhaar enabled payment system, I can withdraw as low as 500 rupees cash as well. And that's why you really see that from a mere 5 lakhs ATM, which is a micro ATMs, which is a human, carrying ATM, I would say, now it's almost 17 lakhs. But at the same time, with the focusing on the digitization, the UPI has definitely made a difference. And that's why we see the entire curve from the UPI, the number of transaction value has grown way in the last 4 years. And obviously, COVID has helped us a lot. At the same time, if you really look at the lending penetration or the investment perspective, the total outstanding book of the credit, which is there, only about 19% of total lending is in the rural part of India. That is what we are talking about, the challenge that we are going to see and how can we overcome as we get into this particular webinar. And overall, in the total investments by the venture capital of the PE world is about $6.6 billion in this particular sector. And lastly, I think government has made different types of schemes on a very regular basis to ensure there is a complete rural financial inclusion, and ranging from Pradhan Mantri Dhan Yojana, where they have opened about 35.37 sort of bank account which have issued debit cards where you can start withdrawing money, or there is also called Pradhan Mantri Mudra Yojana for SME loans, or even if you look at, which is one of the largest scheme, which is about providing them the personal accident insurance through the Pradhan Mantri Suraksha Bima Yojana as well, which almost talk about 34 crore enrollment has happened. So there are multiple such schemes where government has come out on a regular basis to ensure there is a complete financial inclusion. With this, I would like to stop my presentation, and with this particular background, I would like to hand over to Mr. Ravindra sir. Sir, you have seen that with such a large population, and there is so much of large opportunity out there. At the same time, everyone has been questioning that it's really difficult to make money. So on a macro basis, is there anything specific you think one should do or look at it from a rural part of India so that there is a financial inclusion, there is a digitization happening, at the same time lending to investments is also happening in this particular area?
Thanks, Amit. Thanks, Amit. I will just like to give two color to the entire discussion to the rural India. First is I would like to define the disguised unemployment. Actually, the disguised unemployment which is prevailing into rural area is that you think or the person thinks he is employed, but he is not. Because employment means you are able to gainfully employed. And in the rural area, if you find your number of people who are not gainfully employed. So that's the part one. If you look, I'll just like to take a reference to one of the RBI reports. It's slightly dated. It is 2021. It talks of the per capita credit in rural India, which is in the range of roughly around $150. As against, I mean, I'm comparing a similar economies, not a similar economy, much smaller economy, both in terms of pricing power parity. It is Vietnam and Philippines. Now in the Vietnam, the per capita credit to the rural population is around $250 to $350, and in Philippines, which is slightly a larger economy, it is around $300. So that is the landscape on which the credit demand is there into the rural India, but we are not able to fulfill it. If you see that the fundamental reason of not having a credit demand into rural area is because of this trifecta, which is a physical infrastructure, financial literacy, and digital products. So I mean, these three are fundamental for boosting, for creating a demand into the rural India. Now, if you see that, now it's very, I mean, we all concentrate only on creating demand for credit into rural area. But mind it, a credit demand can create when there is a consumption and when there is an investment. Now, for this to occur into rural India, you need to have invest on agriculture technology to improve agriculture production, for make it beyond the sustenance financing. We need to have a greater penetration of the financial product and the services beyond the crop loans, beyond the machinery loans. We need to also create a microfinancial institution which are much more sustainable. Insurance, we need to create a micro insurance penetration and the micro investment penetration. And obviously the banks are on the lead, all the people are also in terms of the digitization of the rural infrastructure. Another important aspect which will boost the agri credit demand is the improving market access at the rural area. Do we have an e-commerce platform for rural India? Do we have a fintech or a tech fins who are coming into a logistics space into rural area? I think these are the points for us to ponder. Third important aspect of creating a demand is creating a agriculture education, primarily led or I put that agri-financial literacy. This is also important. And one factor which is, though is not directly related, but it is a long term, is that do my farmers know sustainable practices? That is also important in a long run. And the last but not the least is building a social enterprises, like better managed cooperative sector, district, small village level credit societies. I think these trifactor, until we make it strong enough, it is very difficult for boost the demand in credit of credit into rural India. Thanks, Amit.
I think you made a lot of very, very important pertinent point. As you mentioned that when you talk about financial or rural inclusion, it's not only about financial services, but it's all about consumption, it's about infrastructure, and it's about creating demand. And while you have a demand, what about ensuring that Amazon can go to the last mile as well? And it's all about the last mile, which we are talking about. I think at least we'll start with the overall initiatives in the financial services or the financial inclusion which we have seen, and that's where we have seen microfinance have really done fantastically well, and that's why we see almost half a dozen of microfinance banks actually getting converted to small finance bank as well. At the same time, do you think that's enough? Is there a need for more microfinance organization to come? What are the practical challenges one face when we really talk about providing this lending in a form of microfinance?
Amit, one aspect I will not discuss in this challenges is the regulatory constraint. So I will keep it aside because there are stringent, I put it that way, there is a cost of compliance. Do my microfinance as of now has the enough capacity, financial muscles to bear the cost of compliance? So I leave that part separate. Now, if you see, there are three fundamental problems with this microfinancial institutions of any form. You talk of MFI, I'm talking of even a primary block level agriculture credit societies, all put together. What is high operational cost? Because of their reliance on physical reach. And this further is accentuated with the problem of a small ticket size. So cost of servicing, cost of deployment of any credit product become very costly. This is one. Now, the second problem is credit risk. How you manage a credit risk, how you assess a credit risk. Because there is a lack of formal credit history in this sector. As a part of the credit is also the default rates. The default rates are very high in this sector. The regions are many. We will not go into the details of the region. And third, which microfinancial institution faces is the limited access to credit, to their own funding, capital. They have a funding constraint. MFI often struggle to raise sufficient capital at an affordable rate to lend to the rural customer. And they sometimes depends upon the grant. I'm not talking of very large MFIs, but normal MFIs, they also depend upon the grant. Now the question comes, okay, these are the these are the challenges, and addressing these challenges requires, a multifaceted approach involving technological innovation, policy reforms, community engagement, and capacity building. I give you, just to illustrate my point, I will give you 2 and 3 examples. How can you reduce an operational cost of microfinance institutions? Can we more adopt it is a phygital model. Even today, microfinance institutions are adopting a phygital model, physical and digital model. Can I improve the percentage, increase the percentage of a digital model, digital of the phygital scope, so that cost of operations goes down? Mind it, into rural area, you cannot have a 100% digital model. It has to be phygital model. Now the mobile banking. Can we offer a mobile banking? I think you study only RBI come with a draft guideline for a second factor of authentication other than the standard SMS. And this is probably try to reach to the rural masses which have a low penetration, low internet penetration or a poor connectivity. The second important aspect is agent network. The more and more agent network, we use the local agents equipped with a digital tool to serve the remote area. And third is partnership. Can the microfinance institution collaborate with the fintechs? And obviously, the various government programs. The third and most challenging is for the microfinance institutes is the credit models. How to enhance their credit model? How can they use the alternate credit scoring, the so-called surrogate model? Now we have various data point, touch points on which the industry can build a surrogate credit models for them. So I think these are issues which are permeating into the microfinance industry. And obviously there is one more fundamental issue to any credit institutions is the capital. Availability of the capital and cost of the capital. Because both things, availability and the cost of capital, is transmitted to a much more proportion to the borrower as a cost of lending. So how can microfinance institutions come up with a cheap and reliable and sustainable flow of capital? There can be impact investors, who are willing to accept lower returns in exchange for a social impact. I think these are few areas, challenges which microfinance MFI are facing, and they're trying to overcome it by adopting various methods. Mind it, for MFI there cannot be one rule, because they live in a microcosm, a very small micro ecosystem, and so they need to adopt to that ecosystem. Yeah, Amit, I think I try to answer this question. It's a very long question, but very, very complex questions to respond, but trying to summarize it as few words as possible.
No. I think you made very lot of different important point, and I agree with some of the things: the agent network, the business correspondence network, the partner network, and today there are lakhs of agents which have started parallel income, I would say, while they would have a credit shop, but because of they being a moving ATM or the business correspondence, they've started getting. They're not only creating a financial inclusion also, but also sort of creating an additional income for them as well. With that, I think if you see what we have seen in the rural part of India, there are NBFCs who are focusing on LAP loans, and obviously we have microfinance institutions. Then we have also, some of the NBFCs focusing on agri loans, while obviously the banks have been also, been focusing on. Somehow, what we found or what we heard is that agri loan, while the opportunity looks to be a very large opportunity, whether it is providing to cattle, to crops, and other things, but most of the time we have seen that agri loans has been bundled with the improvement of ecosystem. And you did mention that while lending is one part of it, you have to still improve the overall agri ecosystem as well. Do you have any views or thoughts around this? And in your experience, what has worked? Which are the models which have worked around agri financing actually?
See, there are various models which have worked, but there are more or less of a localized model. I'll give you only one example to illustrate this. So because we have rightly pointed out that it's not a question of only financing one particular activity. It has to be financing in totality so that the person or the borrower get a sustainable source of income. Unfortunately, agriculture income is continuous, at the mercy of the nature. That's also a fact. So I give you one example. It is not appropriate for me to name, but it's a live example somewhere in mid of India. A small fintech, it has created an ecosystem for dairy farmers. What it did is very simple. He has connected 4, 5, or 10 villages where there are a lot of milk cattle. On the one hand, he went to the farmers showing that if you have a milk cattle, I will connect these milk cattle to your milk production to a cooperative society. He created a small mobile app for those people, because smartphone penetration is now very, very high even into the rural population. On one hand, there's this. On the second hand, he went to the bank, to a bank branch, to your local branch, and it happens to be State Bank of India, where the lead bank over there. It approaches our branches and saying that, look, I gave you 10 villages for milk cattle financing at a reasonable rate. You give some interest rate concessions to these people. I will give you visibility on every day, each day, of the milk production by each milk cattle. Now he went further. He went to the farmer. He said, if next time, if you want to purchase this milk cattle, which is primarily a buffalo, I will connect to you with a wholesaler and get you a milk cattle at a much lower rate. He went to a doctor, veterinary doctor, and again with them created an ecosystem. So what he did is he created a self-sustainable dairy ecosystem. He also earned money. It's not that he's doing it for free. He also earned money. Bankers were happy. Entire cash flow was routing through us. The cooperative society, the dairy cooperative society was happy. They are getting the milk. They are getting the quality. They have the visibility that this day, tomorrow, this farmer will not be providing with the milk. So the demand and supply forecast was also been done through a smaller. If now these type of ecosystems, which are a micro ecosystems, need to be created. So you wanted to give an example. This is one example. One more example, which is in the crop loan. It's already there. There are a few companies which does this. Is basically based on the satellite imagery. You provide a data to the banks. And the banks know what is the stature of the crop loan, where it is growing, it is indented with the flood, or what is the growth stage, everything that they know. So all these, if you look at the base of this ecosystem, again, they have addressed the trifecta which I initially mentioned of physical infrastructure. Ultimately, you're reducing your cost of operation, you're reducing the cost of borrowing, and creating a credit culture. So there are numbers of examples, but what is required into the rural area or the rural landscape is how can I create a web of these small ecosystem, replicate this ecosystem into individual spaces.
You did mention that with this building this ecosystem, specifically the crop, at least that individual has started creating their own credit history as well. And that also is playing a very important role. And prior to that, also, you mentioned that agriculture will require probably a different types of credit model because there's not much of data available. And it's still, to be in the early days of, I would say, streamlining the entire process. But with digitization, and specifically, during the COVID, when all the transactions were led through digital, do you think that probably there is now a sort of a credit model available because now there is technology-led data, there is UPI, which is, as we saw in the graph, has grown, and there are a lot of other companies which is providing information about the agriculture in terms of weather and thing. There could be a good credit model which can get developed to fund some of them as well.
Yeah, I will go slightly how the credit models are built. I put it that way. Okay, but particularly into a segment where there's hardly any credit history. Undoubtedly, this COVID-19 for this segment in terms of digitization has played a positive role. I won't say that COVID-19 was a boon. No, it does a positive role. I don't talk about increased adoption of digital financial services or financial literacy. Let us talk of 2 and 3 fundamental. One is it has shifted the borrowing patterns, A. Secondly, it has improved the credit discipline. And third, attitudinal shift. These 3 fundamental issues they have a bit. How the borrowing patterns, I'm talking more towards a rural, and mind it here, rural, I'm trying to mix rural with urban poor, or the person at the bottom of the pyramid has small disposable income. Now, if you see, there is a earlier rural means agriculture financing, crop, tractor, machinery, blah, blah. Now it has gone for diversification, healthcare expenses. Now the borrowing has started to roll into healthcare expenses, education, even for a consumption need. If you see now there, because of the digitization, because of the fact that the customers now, the agriculturists are more aware of the digital financial services, they become much more financially literate. They have started increased preference for a formal credit sources. So these two fundamental change into the borrowing patterns have been observed. Credit discipline. Now, if you see there was a greater emphasis. Now the customer have a greater emphasis on a timely repayment. Why? Because it has been driven by digital reminder, no cost reminder, your SMS, easier payment methods. Now you don't have to go to the branch to pay your loan instrument. You can use UPI to pay your loan. You can use, sitting at your home, you can do it. And the financial education. And another important thing is that now the borrower, because of the digital penetration, because of the lot of unsecured loans or the digital loans, the rural borrower, the rural customer has realized the need for maintaining a good credit score. It's not that though they realize, because if I do not have a 750 or 650, I'm not going to get a loan from X, Y, or Z NBFC for my consumption need. So therefore, these are, and then attitudinal shift that I told you, they have a growing comfort with the digital interfaces. Now they are more open to the digital banking. They don't get afraid. They want to have a best webs. I mean, they want to invest into the internet connectivity by subscribing to the much better model. So all these issues helped a lot into improving this, what you call it is a technological or a digital penetration of the rural India. If I missed any point, just let me know, because maybe.
No, I think, as you rightly, I think it's very interesting you mentioned that suddenly because of the COVID, there's a huge shift, and it's a combination of awareness, it's a combination of technology, and it's also they've seen the benefits as well. And and that's where even the confidence of the financial institution has also gained, okay, if you lend, the money will come back. Right. I think all this as a cumulative have made a difference.
Correct. I mean, now this has led to a evolve of a surrogate credit model.
Sure.
Because change into the behavior pattern, this change into the credit discipline, more leaving your digital footprint. I put it that way. Though, you can't track your SMSs, you can't track your WhatsApp. This is very, very bad. I mean, absolutely RBI no for it. But still, based on a digital behavior, you leave your footprints. Leave alone through UPI, you leave your consumption footprints. At least your bank knows something about you. So all this has created try to create a credit model. In SBI, we did build a credit model of around, we take 400 data points, roughly around 400 odd data point, to create a model for new to bank customers. And obviously the model did a lot of iteration over a period of 2 years, but it is a fairly good model with a very, very low NPA.
Wow.
Yeah.
We would love to learn. I'm sure everyone who's hearing would also learn to understand what are some of the secrets of SBI success. But before we get into that, I think we have got two specific questions from our audience. So I thought it would be good to even answer that. First question is, what I understand, agri financing is one of the most risky finance or risk financing, considering that how can it be financed at reasonable rate? Normally, when risk associated is higher, financing takes place at higher rate. That's the first question. And the second question is, how do agriculture cycle and income seasonality affect the repayment behavior of rural borrowers in India?
I'll take one by one. First, he calls agriculture financing is a risky financing. No. Agriculture financing was a risky financing because of the cost of operation for recovering the money by the banks. Now this BC model and which reduce the cost of operations. The agriculture financing per se is not a is not a risky financing. What is required to be done? You cannot have a per capita approach in this agriculture financing, right? I will finance only crop loan. No, then your finance is going to go bad. If you are financing a borrower, you should understand that what other needs he has. Now, if he is let us example a rural household, he has beyond the crop loan, does he or she or do some of the any other businesses? Does he or she is engaged in any other allied activities, agriculture or agriculture allied activity? Does he have a small shop into the market in the evening? He goes and sells something XYZ. So we need to finance the whole package. We can't finance only crop. Because see, mind it, agriculture financing per se by nature depends upon two fundamental issues. One, vagaries of nature. Because it's not that, suppose there is a drought. Fine, there is a drought and there is an availability of pump sets. You can irrigate your plants, but your cost of operation goes up. So in that way, it is dependent on the vagaries of nature. But how can you balance this? Now you can balance this with this. And the second question was I think it's the cost of financing. See, actually, agriculture financing primarily, that is why only the large public sector banks are there into or the public sector organizations are there in a agri financing. It is risky. And the risk and reward, the risk and the cost of landing cannot be commensurate because, it's a chicken and egg story. If you charge 20%, you are doomed. Then agriculturists cannot pay you back. Your NPA level are 5%, 6%. For you to land at 12% again will be difficult because your cost of your cost of funds are becoming high. So it's a slightly tricky question. It can be possible only when you give a combo product to an agriculturist. Otherwise, it is a difficult proposition. I must say that is the reason. Even in NBFC, how many NBFC does agri lending? You tell me. Hardly. Because because in NBFC the cost of funds are very high. Your borrowings are very high. So therefore, it's a tricky. It's a very, very tricky question. But there are government mandates for lending to the agriculture sector, which forces the banks to lend to the agriculture sector. Because if you do not lend here, there is a counter penalty to you. So therefore, counter penalty in terms of monetary ceiling. So therefore, it will happen.
Sure.
But I tell you, if you are able to build agri financing with a high level of technologically input, both in terms of assessment of the credit needs and also in terms of monitoring of the credit portfolio, it's a good financing. Because fundamentally, my experience with the borrowers, I worked in extensively in two states. One is Rajasthan as the head of the Rajasthan state, and then in Andhra Pradesh as the head of Andhra Pradesh. And I also worked in UP where I belong to. Farmers fundamentally want to pay. That's the basic, they intend to pay. If they are given as proper support, they will pay. So, that's the fundamental difference between other cohort of lending and this cohort of lending.
Yeah.
I'm not saying other cohort of lending don't want to pay, but still it's a fundamental difference.
I think the key is, sir, when there is an intent to pay, then ability is a byproduct. I think the intent to pay is in any geography or any type of lending is high. Then in general, I've seen that people find the means and ways to pay. And it's the intent where it can create some of these challenges, which is still not, no one knows how to identify the intent to pay from a borrower perspective.
Yeah. Next, I think some.
Yeah. So just shifting the question to while we spoke a lot about lending, credit facility, digitization as well. But at the same time, all this is truly have been possible because of so many different types of schemes which the government has launched from time to time. Suddenly we saw 30 crores of bank account been opened because of the Pradhan Mantri, Dhan Yojana and all the other schemes. And we've seen even the insurance schemes which been launched by the government who had really made a difference, whether it is health, whether it is accident and all this. Any high level view that you have on some of these government schemes and initiatives, and is this truly helping for rural inclusion?
See, I put it not one government scheme. It's a combination of all the government schemes which are really help the rural landing, change the landscape of the rural landing, in addition to the economic factor and the technological factor. We'll start with technology factor. The public infrastructure has made life easy for the banker. I put it that way. I don't need to work around to prove that he is what he professes to. Your KYC norms, your Aadhaar, UPI, that is all the digital payment infrastructure. So if you see this public digital infrastructure had made the cost of identification of a borrower very, very cheap. So this is the fundamental change which will make into the rural lending. Then because of various government, I will name one government scheme in particular because they all work in tandem. It's very difficult to say this is good or this is bad. Somebody will say that Pradhan Mantri, that Kisan Yojana, whereby every year you get 6,000 rupees into your account is very good, bad. These are all political issues. I don't want to go into that area. But fundamental, which really help into the rural area is one is the public digital public infrastructure, which will help the entire India and rural India more so. Second, which will help the rural India is the internet penetration. Though it is intermittent, but at least it is there. So internet penetration. Third, if you see that there is a rising rural income. The migration trend has not stopped, but it has slowed down to a certain extent because of creation of a business nodes within 5 to 10 kilometers of a village. It's a village market. If some of you who travel to villages or go to an outskirt, you see after 10, 15 kilometers, you'll find a road crossing where some type of shops are there. So these rural business ecosystems, they have increased the rural economy and mitigated, inhibited, I put it that way, some type of migration. And obviously the fintech innovations which has come, whether it's app, whether it's a landing platform, blah, blah. So there is a lot of policy and regulatory support in terms of financial inclusion programs, Amit, which you spoke at length, also in terms of various type of subsidies and the support system. Then there are various insurance schemes are there. And one more thing which continuously the government and the banks are also wanted to push in the agriculture is the idea of micro savings, micro investments, micro insurance. Now, this is going to be the new growth sector. See, if you look at it, now the rural population also views all OTT programs. They look at WhatsApp. They subscribe to Facebook. Now they know what is a mutual fund. At least they have some idea about it, but they don't have that corpus of money to invest. Through the digital, now they can approach the mutual fund. Can I create a very small mutual fund? What you can say app for them? Small micro investment in instruments. This is one. Second is insurance. Can they take insurance on the go? See, why you need I give an example, why you have to invest 1 lakh of rupees for, 10,000 rupees per year for a 1 lakh of disability insurance. Now the farmer thinks this month I'm not going anywhere. I just need 1 month insurance for my disability, for my accident. I pay 1 rupee, I pay 5 rupee, I pay 10 rupee. So these type of micro insurance products, these are also the key to this and the new growth area which will happen into the rural area. Obviously, you all know there are mudra loans. Government is pushing for the mudra loans. There are non-collateralized loans. There are a lot of employment generation schemes which is being put up by the government. They are trying to create a village cluster into the area, employment. Then all those activities are being done by the government.
Sure. Sir, you made a very interesting point on the micro savings, which is yet to get implemented in rural India. In the last, I would say, 10 years, the mutual fund, which is the SIP, as we have understood now, we're almost talking about 25,000 crores of SIP happening every month. And that is still focused on the urban part of the India, or maybe the middle part of the India. Now, you mentioned about micro savings, insurance, and a lot of other products. What will make that happen? Because that is where the next big growth is going to come, because everyone has to now start beating the inflation, and it can only happen practically with some of these instruments, both from awareness to even use of these instruments as well.
Yeah, I put it that way. All the mutual fund companies, they have an app. It's not that they don't have a mobile app. Right now, I think they say 100 rupees is minimum SIP, or 1,000 rupees, that I don't recollect, whatever it is.
Yeah, it is between 1,000 to 5,000 rupees per month. Yeah.
So first is, can I make it 100 rupees? Because as an IT man, cost for a computer, there is no difference between a 30 of 1,000 and 2 zeros of 100. ITC. Only thing is that if you make a 100 rupees minimum SIP or 10 rupees minimum SIP, you have to build a large infrastructure, large IT
Cost
infrastructure.
of managing that itself is a challenge.
That's the one thing. That is the only challenge. That is not a very problem for a large mutual fund, because the amount of money which will flow, the amount of stability that will bring. The challenge is that the so-called influencers. See what happened, particularly into the village or rural ecosystem. If somebody got ditched, they are still very gullible, not very financial literate. If somebody got ditched, the entire village won't touch it. This is something is bad in this. I think this is education. I put it that way. A genuine education. There's some sort of, because we can't leave everything to the government. We cannot leave everything to the large public sector organizations. There's something which society we should also do. The fintechs can also do. Can we create an authentic education program where they make the villagers understand the difference between the fake and the fun? Now, even for whatever, every mutual fund, you give a disclaimer of half a page, risk, blah, blah, blah. They don't understand. You create a Juriscometer also, but it, in a one-page ad, it will have 1 centimeter column. This is very high risk. Now these sort of people, or the second option is that we restrict these SIPs to a very safe havens. I mean, if 100 rupees, they can't invest into the risky, they can only go to a debt or hybrid or a mix of that. I think these are the fundamental changes which is going to do. I don't know, you recollect, Madam Madhuri Big-SEBI chairperson has already floated an idea of fractionalization of share. I mean, it's a long drawn, it will involve the Companies Act, but ultimately it leads to even a small villager can think of owning let us say 1/10th share of ITC. I mean, this will penetrate. See, I think there is one more misnomer people have, that money lies into the urban area. When the Jan Dhan Yojana started, people think that's a waste of money on the banks, blah, blah, blah. But reality is that Jan Dhan Yojana, I can't see the figure, but Jan Dhan Yojana, bank balance account runs into few thousand crore, and they are very stable. They are very, very stable balance. So on that balances, actually bank can invest, bank can go into treasury operations. So there is a money into the rural area because margins are high. That's the difference. Margins are high.
Sure. So I agree. That's very interesting about the high margin, because this is an area where almost 60% of the entire employment on the rural is on the agriculture. And that is something, either it is self-plowed or it is even, working with the large farm. Either way, it's self-cultivated, and that's where the margins are very, very high. I want And it's almost about 45, 46 minutes that we have started this particular webinar. So I've got one question, and then obviously we can move to probably our last question. So for one of the question which a user has is that can we use the contract farming relationship for secured lending for credit cards? I think it's very interesting, and for to look at this aspect, because one of our portfolio companies are working with the banks on credit cards, but so we can even introduce Pankaj to them and explore them. But yeah, can we use the contract farming relationships for secured lending for credit cards? Could be.
See, I put it that to credit card are nothing but a means of having a credit facility. Correct. That's all. Now the contract farming, I think there is one question cropped out, the role of a large FMCG. The contract farming normally comes in collaboration with the large FCN. That is writing on the wall. They only assure that they will provide the necessary technical know-how and the infrastructure for the farmers to grow the contracted produce. They don't, and sometimes they also assure a minimum buyback. So with this, you have a secured credit. I put it that way. Whether you use a credit card platform or use a bank platform or use an NBFC line of credit, I say credit card is nothing but an overdraft facility.
Yeah.
You can, whenever you want to dip, you can pay whenever you want to pay.
Sure.
Mind it, in your credit card, you can pay. I mean, you can expend and you can pay today itself.
Correct.
So that's
you decide.
That's model is there, but in terms of RBI, I don't know whether RBI will allow the people to agree lending through credit card. Obviously, on the bandwagon of UPI, it may be, but non-UPI, I have my doubts.
Sure. No, but this could be interesting. Maybe one of our portfolio companies which work closely with the banks, like 42 Cards, can think about of secured credit card for farmers. It could be very interesting proposal as well. We have one more question. I think this is also interesting. Can you elaborate the role large FMG companies play for para-banking collaboration? I think what we have seen, at least on the supply chain finance side of it, like one of our, again, a portfolio companies such as Finag has been working with some of the large FMCG to provide working capital needs for rural part of India. But would love to have your views on this as well.
No, I think both, whether not only Finag, there is one more company known as Mintify. It is also an there are a number of like this. See, it can both or a vendor side on a supply chain. Ultimately, I call it as a supply chain.
Supply chain.
I'm a vendor to somebody, I'm a supplier to somebody. I mean, it's a role change. Something like in a family, sometimes you become a son, sometimes you become a father. So you become same what you are.
Sure.
Okay. So the large FSNG has a very good role in this area, actually speaking. What is required, but right now they are only restricted to N-1, N if themselves, their supplier, their vendor. Can we penetrate beyond N-1? See, the problem in the vendor financing or the supply chain financing, either side, I put it either side, is that you only finance N-1. Do you know who is N-2? No. Can we use of the latest technology? Can we go N-2, N-3? See, I give an example, again, hypothetical. Let's say wiper, the car wipers. Now, car wiper has a rubber part, car wiper has a metal part. Then it makes the wiper. If the Maruti takes a wiper, it takes the wiper as a whole from one of his supplier. I finance to that supplier. But what about the person who supplies him the rubber? What about the person who supplies him that the metal part of the wiper? Going down further, what about a person who polishes that metal? So this type of supply chain financing is very, very important. I think with the technological investment, we should think, how can I capture the supply chain? Because mind it, the money lies at the bottom of the pyramid here also.
Correct. No, there is absolutely a money in the bottom of the pyramid. And sir, with that, I would like to just pose a large question. And obviously, you spent more than 3 decades with SBI, and obviously there have been more than 8,000 branches in rural India, 3 lakh crore AUM, and everything we know the way SBI is created. Any innovative strategies, insights, your experiences, what has worked for this, or what has not worked as well, if you can disclose, because at least a lot of our entrepreneurs, a lot of we as VC investors, that we know that some of the things which we have tried, but it didn't work for practical reasons. So any thoughts which you would like to share as a last word or last line, in terms of your experience on this?
See, in SBI, we experiment a lot. I just say what worked is our digital program. I was associated with the UNO, which was in 2014 when we conceived UNO. Everybody says that SBI mein UNO nahi chalega because your customers are rural. That's a different issue. Our login must be around 2 crore plus every day now. Rural chal gaya.
Wow.
After the COVID, when I became the chief digital officer of the bank, I thought that why do not we implement UNO Agri? Means your crop loans, your Kisan credit card, why it cannot be renewed by UNO Agri? Why for a Kisan credit card, the person, the agriculturist has to go to my branch? We launched the program. We thought that ye bhi fail ho jayega. 60,000, more than 60,000 per day we used to renew the Kisan credit card using UNO Agri. Per day 60,000. So I mean, these are the few programs which run very successful. One program which has now become successful is again this SME financing, small and medium enterprises. Basically, informal. I mean, how to take out from the informal financing world to actually we didn't face much problem in financing to agriculture. We did face problem in financing to SMEs, bringing them out from the informal economy to a formal economy and making them use of what you can say balance sheet more fully. I think that is one area where we I mean we now we have doing well for last 2 years. My information says that we are doing very well, but when I was there we tried a lot in SME, but somehow that we could not succeed there. So I think these are, one is absolute success, one is non-success. More I'm taking more in terms of the relation to the target audience. Otherwise, our share price is a reflection that where we are today.
I think you've been a very, very interesting, strong backbone for digitization, and the fact that you launched, itself is a big thing, right? I mean, to say that was truly the first digital bank sort of within the SBI, which itself, in my opinion, is transformative. We've almost spent about 54 minutes, sir, and there's still a couple of more questions, but probably if it's okay, if you can respond to one of the last questions.
Sure.
Why have cooperative banks not been able to effectively bridge the gap when it comes to rural India lending? I think it could be very interesting to have your views. There are hundreds and thousands of cooperative banks, and we'd love to, have your thoughts. What's really happening in that area?
Within this closed webinar, cooperative banks are owned by whom?
I think it's a very, very interesting question for all of us to ponder and think about it as we look forward to end this particular webinar, sir. So again, I think it's very interesting. So with that, sir, thank you very much for taking out time for this webinar. It's very, very interesting. And what I've been hearing or summarizing is that rural part of India is a very, very large opportunity, but I think even more than the large opportunity is a very sustainable opportunity. And I think you did mention that specifically the banking system has benefited through crores of rupees actually lying idle because of the savings account got opened for some of these farmers, and is not literally non-interest bearing, right? And that's a very stable money. Similarly, I think there is a lot of things can be done which can happen through technology, but it's not only about technology, it's not only about lending, but the overall infrastructure to be made, whether it is creating demand from a consumption to across the board. So I think lot of insights and a lot of things can be done around this particular area, and I at least we strongly at Blink Invest believe that the next big wave, while obviously there are a lot of things still required to be done in the urban part of India, but rural part of India, as we call Bharat, is going to be a very interesting next wave. And someone has to start taking this courage the way people took the courage on the microfinance. It started with Bangladesh, but I think got adopted across the world. I think some of these innovative business models will work. And I know some of our friends and our common friends like Mr. Sanjeev ji is also working on a very innovative brick and mortar shop where it becomes almost like a supermarket for a place for a village or for a particular small town as well, where all type of things can be available. I think some of these innovative models can be very, very interesting for success of rural India as well.
Correct. Thank you, Amit. Thanks a lot. Thanks a lot. And I hope that sessions would have been, this webinar would have been useful to the extent as possible. I can do. One thing I must say that the industry, the innovation must move beyond payments, must move beyond unsecured lending. RBI is also very, very strict on this. And agriculture somehow or other, this agri area somehow or other has still not caught the imagination of investors because there is no quick money. That's the problem. There's no quick money.
Sure.
But it's very money. But once we get the money, I again give the example of Jan Dhan Yojana. How this small 100 rupees or 200 or 500 rupees balances can make few 100,000 crores in a span of 5 to 10 years.
Wow.
That's the power of the rural India. Only thing that we need to be patient.
Yes, yes. I think Rome is not built overnight, so we need patience and something which we all have to look at, and especially we in the VC world has realized, especially in the last few years, that investing is just a starting point, but building a sustainable business which has revenue, which has cash flow and profit is equally important. With that, sir, thank you very much for taking out time. And thank you everyone in our audience as well for participating. Really appreciated your time and look forward to having such more webinars in the future as well. Thank you very much. Thank you.